Hello, crypto cats. My name is Tom. I'm the crypto investor, and it's time for our weekly market roundup. As ever, we start with a heat map of the top 100 tokens in crypto, and you can see that, well, actually, this is showing it's red, but this is coming at you 5 days later than my last video. And normally I do these on a Sunday, but I'm away this weekend. And so actually we are up. If we look at Ether here, you can see that since the close on Sunday, we're up 5.5% or so. So I'm not giving you a true reflection with our heat map because I'm recording this on a Friday. But you can see the standout token this week is Luna. Terra Luna have just secured $1 billion of Bitcoin funding to basically backstop the Terra stablecoin ecosystem, mostly dominated by UST. We'll talk about this more in a bit. But this, really gives it this robust support and adds a lot more credibility to it. I've been a big proponent of Luna for a while. They also have, of course, a deflationary token. The more UST that is printed, the more Luna gets burnt effectively, and that seems to be going up and to the right. It's a great token, and it's great to see it really bucking the trend this week as everything else is somewhat red. Stablecoins representing a larger market cap than we've seen for a long time. Of course, many people rushing to get yield off their tokens as a consequence of all the volatility in the markets. Doesn't surprise us. When we jump into the bubbles, really there are two standout tokens that are bucking the trend. Luna we just discussed, and then Anchor Protocol, ANC, which is almost a direct benefactor of this backstop that we're seeing with Luna getting $1 billion of Bitcoin. So Anchor, if you're not familiar with it, they're the protocol that offer 19.5% return on your UST. So you can stake your stablecoin UST and get 19.5% a year. Now they are also adding utility to the ANC token. It's yet to be confirmed exactly, but there's looking like you're going to need a certain amount of ANC to get that full yield, or some other element to it. But either way, we're expecting to see ANC add utility, and so the token has been going up very nicely. I personally added to my ANC this week. It's not financial advice. I'm just a guy on the internet, but that's just what I happen to do. And by the way, if you do like the content, if you do appreciate these regular videos, please press the thumbs up button and the like and subscribe and comment and all of that good stuff. All right, so obviously this week's news is entirely dominated by the concerning events which we're seeing in the Ukraine with Putin invading. And it's quite extraordinary to see yesterday how the markets completely turned around. If we look at the stock market, the Nasdaq, and you can see that we were down significantly on open, and the market just picked up 7.6% from the lows on the day that Russia invades the Ukraine, which is ridiculous. And why did that happen? Well, here is my take, really, is that Putin just bailed out the Federal Reserve and central banks around the world. They now have a green light to continue to inflate the markets further. We know we've just gone from one global crisis to another without drawing breath. Of course, this is conjecture. Of course, I may well be wrong. But the way that we saw the markets move yesterday, generally, it seems to be that is a consensus, that it means that they can put more cash into the system. The show goes on. And so that the markets speak for themselves, let's be honest. And we saw gold selling off in the same way. Quite incredible turnaround for gold. All right. Anyway, so that's just my take there. And I think there's also the rhetoric seems to be that the sanctions are lower than expected. Of course, sanctions dent the markets. But I found this interesting as well, that Russian banks are going to be unable. The customers are going to be unable to use Apple Pay and Google Pay, which doesn't seem like much, but I feel that all these things help to turn the tide of the people potentially against Putin. I don't see this as a war, as a Russian invasion. I see it's a Putin invasion, personally. And this is not political channel, and I'm not a geopolitical expert by any stretch of the imagination. But I imagine there's a lot of disgruntled oligarchs in Russia who have just got 50% poorer in 48 hours, and there's a lot of Russians who feel the same way as well. And I can't imagine that they're very easily finding a common enemy in Ukraine. It's a country that shares their values and heritage to much. There's a lot of parallels, more similarities than differences. So I just feel that these kind of measures may well actually see that it's internally where Putin has to struggle to contain or to continue to get the support of the people. We will see. Anyway, this whole interesting aspect of it, if you aren't familiar, Ray Dalio has a book talking about the kind of global structures and new world orders. It's quite interesting. Don't worry, we'll get to more crypto chat in a bit. But after World War II in 1945, effectively we had a new world order established with America on top, because it was the only country with any money, and gold being money at the time. And generally speaking, Ray looks at this as being an 80-year cycle that we go through, and that eventually, once you get too significant wealth gap and a devaluing of currency, that we see a spiral down, revolts and wars, debt and political restructuring, and then a reshuffle of the pack. And it doesn't seem ridiculous to say that we're potentially going to be this is macro, we're talking over the next decades or decade, but that we may get a significant reshuffling of the pack. Maybe it's that the US dollar is no longer the world reserve currency, or maybe, of course, that cryptocurrencies represent that life raft after the restructuring, because they remain impartial. So for me, just when we consider these big macro changes, it just makes me feel a bit more comfortable being in crypto personally, rather than government bonds, which would be a safe haven. But who's to say that a government would be able to meet their debts and liabilities? Anyway, getting pretty heavy. Stay with me, crypto cats. All right, so it's an interesting take that financial sanctions on Russia are now easier to evade thanks to Bitcoin. And of course, we've seen Russia's looking potentially to adopt cryptocurrencies after saying that they were outlawing them. They're quick about turn. And so I think we need to be extremely careful right now that cryptocurrencies and Russia don't get lumped into the same basket. And it'd be a very easy rhetoric for regulators to spin, saying that we have to regulate cryptocurrencies, otherwise we can't put sanctions on Russia. So many people cheering on, and as this person says, people seem to think it's bullish that Russia may use crypto if they get kicked off SWIFT. Russia evading sanctions using Bitcoin would not make regulators happy. It would not be a bullish thing to see. I personally do not welcome it and hope we don't actually get that. So if Russia is not able to use the standard payment rails of SWIFT, that could be, well, I don't see it as a good move for crypto personally. Talking of authoritarian regimes, my God, this is a geopolitical one. China is tightening its laws on those found raising funds through crypto sales. If you are raising, I think it's as little as $16,000, then you can be imprisoned. It also goes down to, here you go, $16,000. Also, if you're found caught to be mining crypto, it's a criminal offense. So there you go. That's just Russia's take on things. China's take on things, fraudian slip. All right, so on to Terra Luna. So basically Jump, they're the ones who bailed out Solana wormhole with $350 million of ETH last week. Now they've also joined Three Arrows Capital to drop in $1 billion of Bitcoin to buy Luna at an agreed price of, I think it was $52. Luna's currently sitting at $66. We don't know if this was agreed many, many months ago when Luna was at $100. But either way, the Luna Foundation now has a big old backstop, and it just gives a lot more credibility. And it's more than many banks are probably holding in actual assets. So it helps to backstop the Terra ecosystem and their stable coins. So it's pretty cool to see. And the most bullish news of the week, if you missed it, is that Sequoia Valley VC Group have said that they are launching a $500 million fund to buy crypto tokens. So not talking necessarily just buying the big mega caps, but they are going to be buying into a range of different tokens. And so let's hope they pump our bags in particular. But quite incredible to see this this is a substantial amount of money coming into the market, and it's not the last. Okay, so this chap, what was his name again? I can't remember. David someone. He is a creator of Ruby on Rails, the programming language, and he'd been a very outspoken critic of crypto, but then on the back of what happened in Canada last week with bank accounts being frozen, regardless of if you are for or against the truckers, it's pretty fucked up to freeze your bank accounts for something like that. And so he saw that for him that was a tipping point. He put his hands up and said, I've been wrong. I eat humble pie. I now fundamentally understand the need for decentralized cryptocurrencies. So that was good to see. I mean, he's not an insignificant player. 500,000 followers on Twitter. A lot of programmers love him. Anyway, so that's pretty cool. On to lighter stuff. Puma have changed their Twitter handle to .eth. I mean, they haven't even got an official NFT thing. Come on, up your game, Puma. But I also thought that they'd bought a Cool Cats, but I don't believe that is the case. But they're making their little waves into crypto. And this was interesting as well. This was yesterday before the market completely changed around. This guy, David Ng, saying, oh, well, safe havens, gold or Bitcoin. I think we found our answer, because we can find our answer on a few minutes. So when Russia did invade Ukraine, we very quickly saw gold shoot up a few percent and Bitcoin drop a few percent. What was interesting is then if you were to draw this chart later, in fact, I think, there we go. They came back and we saw the opposite happen. I think someone else drew it on better. No, we're not going to find it, CryptoCats. But either way, they completely turned around. And we saw gold crash and Bitcoin rally. And so, that was very pleasing to see, to be honest. All right, let's jump at the charts, have a look. So there's that gold reversal, which is quite significant. Failed breakout. A massive, massive sell-off. Here is so we have to acknowledge that the correlation between cryptocurrencies and the tech sector is significant. So gold is inversely correlated to Bitcoin, and US equities are completely correlated to Bitcoin. I thought that perhaps that correlation would break and that Bitcoin would actually represent a safe haven asset. Now we have this war, but that doesn't seem to be the case for now. It's still correlating very, very strongly with tech stocks. We've seen this big bounce. I think this is the Fed playing market makers. I feel that this was federal purchasing into the market, or it's the hedge funds knowing that becomes more of a certainty, knowing that they have to be more dovish in their rate settings and bond buyback. So we will see. But this is you would have said here that this was a reversal candle. If we do get follow through next week and we do see a break of this, it does feel just pretty disgusting talking about this kind of stuff whilst everything's going on in Russia. But, this is what I'm here to do. I'm not here to be just denouncing Russia. But, if we can get a break here and a close above this downward trend line, then that would be a really bullish sign for the markets and the crypto markets as well, given that high correlation. Looking at the crypto markets as a whole, this is the total crypto market cap. So we're at $1.7 trillion. You can see again, we've got that very nice bounce, potentially double bottom forming here. So that would be a very nice sign to get this double bottom, and then that could potentially lead to a reversal here as well, as we may be entering a continuation of easy monetary policy because they simply don't have a choice. They're going to have to maybe subsidize the high energy prices that are going to be coming our way. They're going to have to consider more moves towards energy independence, maybe investing in solar to try and promote energy independence in Western states. Who knows? But either way, the probability of easy monetary policy has increased significantly, rather than the risk aspect of this war becoming a third world war. Anyway, let's first look at Bitcoin. So Bitcoin, very correlated to what we just saw so far. Really nice bounce at the top of the session. If we can close this, I imagine what we could well close is around $43,000. this week. And if we get a break of there and a close above that, then we could really start to move. So it's nice to see that we've also put in a higher low here potentially as well, if we can get a close the end of this week. So yeah, ETH, very, very similar structure, to be honest. We're not out of a downward channel. We are still very much in that downward channel. And for me, break above 3,400 would spell a really bullish sign to moving back up. So if you didn't see my video this week, I did a comparison of different assets with money supply. If you're not familiar with the monetary supply, this is basically all of the dollars created by the Federal Reserve, the M2 money supply. So you can look at Bitcoin on your, I'm not going to go deep into it, but this is Bitcoin, the standard chart. And there's that peak in 2017, excuse me. And then you have this now, which is dividing Bitcoin by that current money supply. And you can see that when we value Bitcoin in 2017 US dollars effectively, this is exactly where, or the standard US dollars, this is exactly where we found support. And it's happening again. And so it's very nice to see that this is potentially a back test of that high and that we resumed up. And we're coming back for a second test and hopefully resuming up. So I just thought that was quite interesting to see. The ETH Bitcoin ratio is at an interesting inflection point. If you don't follow this ratio, we were in this channel here for about a year and a half, 600 days or so, and then we broke above it. And then since resistance, obviously when resistance is broken, it flips to support, and it's held as support for almost as long. Nearly a year, and this is a significant trend line, very significant trend line, and we're just kind of kissing it at the moment for the last few weeks, but we're also coming to a break of this trend line, and so it's shit or get off the pot time really for ETH Bitcoin. And I would hazard a guess that this sorry, crypto cats, I have a cold and I keep on having to pause to cough. Please bear with me. I record these in one take every time, no editing. And so anyway, I would say that the probability of this one breaking is significantly greater, and we may well see an impulsive move for ETH here, which would be rather nice. The 50% flippening is where we would, or 50% market cap is where we'd likely see some resistance. Perhaps we carry on down here before breaking, or maybe we actually move and have a retest of this. Generally speaking, ETH tends to perform much better than Bitcoin in a bull market, in an upward market, So we will see. I think it really is going to depend on the macro environment. But if we do see a reversal in the stance of the Fed due to the situation that is developing in the Ukraine, then that would certainly be a catalyst for this as well. It's great to see the markets are really pushing on up today. Very nice moves indeed. All right, so Luna, can't not look at Luna. Luna is up 35% on the week. Oh my goodness, what are you up to? And really nice, strong move. I wouldn't be surprised to see this really push on. I'm quite tempted actually to add to my Luna here. Really nice, strong move for Luna. This is interesting. This is looking at the Tether USDT dominance. So you can see that really over the last couple of years, I mean, the trend is gradually up and to the right, but in these kind of big cycles as people get uber bullish. And you could argue, I mean, I could probably draw this on more like this, as these are areas where we've seen it peak out, and that potentially, maybe it is actually a good time to be selling off your stable coins to buy into assets such as Ether and Bitcoin. Now, only if we're using the past 550 days for reference. Chainlink looking really nasty, broken down below this. It's quite a failure. If we do see a close down here, I mean, I still feel like this could be a fake out. good things are coming for Link. You will be getting yields from staking it. It still remains an essential part of the whole infrastructure as an Oracle token. But it is nasty to see. Or is it on sale? I personally did buy a little bit, even though from a technical perspective it structurally looks pretty horrible. But I couldn't resist grabbing some $12 Chainlink. I mean, it is as low as it has been for over a year. Finally, ANC, we were mentioning Anchor Protocol. This has had a fantastic move in the last 3 weeks. I wouldn't be surprised to see ANC push on here. Perhaps when we get clarity of what the utility will be for ANC token, we will know. But yeah, really nice moves. And that's it. That's it, Crypto Cats. I hope you have a lovely weekend. As ever, this is not financial advice. I'm just a guy on the internet. Please do like and subscribe. All of the good stuff. And I'll speak to you ever so soon. All the best. Cheers. Bye-bye.